Welcome to the Rob Kall Bottom Up Show, hosted by opednews.com. It appears on Progressive Radio Network, on Pacifica Radio, at opednews.com/podcasts, on iTunes, on Stitcher, and it's been growing. Make sure if you're watching the video that you subscribe to the channel too. My guest today is Walt Mccray. He is the Director Emeritus of the Public Banking Institute, and he is the founder of a new organization, Public Banking Associates. So the Public Banking Institute is publicbankinginstitute.org, and publicbankingassociates.com is the other organization. We're going to talk about public banking. Public banking is a really bottom-up idea. It's a big deal. About 40% of the people in the world are connected to public banks in some way. They're in about 40% of countries. You can correct me if I'm getting some of these stats a bit off, but I think those are the kinds of numbers. We're talking about billions of people who are already benefiting from public banks. The state of North Dakota has had one since the 1920s, and during the big economic catastrophe of 2008, it was the only state that really didn't get hit hard. So that's a kind of an overview. Why don't you tell us what public banking is and why we need it?
Okay. Well, thanks, Rob. It's good to be here. You mentioned 40% of the world. 40% of the world's assets are in public banks, and it is billions of people because little places like India and China and Japan and Brazil and Russia, all of them have public banks.
Kind of reminds me of single-payer healthcare. You know, such a huge percentage of the world has single-payer and public banks too.
Yeah. So a public bank is a bank that's owned by the people. That is to say that in those cases, the governments themselves own and operate the bank. And in those cases, the sovereign central bank that they have is public. So here, we don't have that. Our banking system is owned by private individuals. The Federal Reserve being a private entity with obviously very integral federal governmental ties, but basically it's privately owned, and our money, most of our money is issued, all of our money virtually is, except for whatever comes from the government, is issued as debt. So a public bank allows the people's money to be put to work for the people, as opposed to having public taxes and revenues be sent off to these private banks, primarily the ones on Wall Street, that are big enough to handle the governmental deposits, which is what these tax revenues are. The reason that it's so important and looked at now is that cities, counties, and states are running out of money. It's just a huge problem to try to continue to keep up with the growing needs of infrastructure and students and new population, the need for affordable credit for small businesses, the desires that we have to invest in new technologies, as well as better schools, and a host of other things. The money is hard to get. By and large, city budgets are not enough to take care of these growing needs. And so what do they do to try to make up for it? They have to go to the bond market. They go to private banks to borrow the money. And by doing that, the cost of our infrastructure projects and other public needs double, because the financing costs typically amount to an equal amount to the project itself, which is extraordinary because,
equal to the cost of the project itself. That's massive.
Yes, indeed.
And how does that compare to working with a public bank?
Well, if you would look at, and we can take an example of the North Dakota Bank, for example, and we'll be talking, I guess, a lot about that, simply because it's the only American model. But in North Dakota, if a municipality wants to build a school, the bank there has a mission to serve the public interest in a variety of ways: agriculture, industry, and also the community financial institutions. to be able to partner with the community banks and credit unions to make things happen. Now, if a municipality needs money for a school, instead of going to the bond market and paying, say, 3, 4, 5, 7% for the bonds that they would borrow, they would go to the public bank, and the Bank of North Dakota would give it to them for 2%. Just the spread between 2% and 4% is enormous. So there's significant savings there. But in addition to the cost of the money, it also saves the cost of the other overhead about that, which is the underwriters and the insurers and the bond traders and the market interests, all of which are at the trough when a municipality comes to borrow money. In North Dakota, that 2% would not only be a huge savings, but it would be coming back to the people as revenue into the bank, which would be able to make even more loans. So in North Dakota, and how that looks like, bottom line is that people save money, pressure on taxes is kept down, but the bank makes money. So in North Dakota, this little state of North Dakota, it's only like they have about 700,000 people, but in the last 10, 12 years, the bank has spun off about $600 million in revenues. That's in non-tax revenues, meaning money that comes into the state treasury without people having to pay more money for taxes. It's kind of a rarity in municipal management to get non-tax revenue, but they've got it.
Okay, so a couple questions. Just to be clear, a public bank does not open to the public. It's a kind of a wholesale or business-to-business operation that only does businesses with other banks. I think that's something that needs to be clear.
I'm so glad you mentioned it, because I keep forgetting it, that it's not a public bank in the sense that it's not publicly traded, and it's also not something the public does business with directly.
Right, and it basically does business with local banks, which is a bottom-up thing. It basically supports small local banks.
Right. Yes, it does.
And what you described to me, we had lunch a week or two ago, and what you described to me is that basically a bank that might not be able to handle a big loan on a project, let's say a school, can go to a public bank that has more resources and get the help it needs to finance a local school. Mm-hmm. Or other kinds of local projects, road building or repairs or infrastructure.
Yeah, but let me clear up that a little bit. These projects that you're referring to are typically much larger projects than community banks would want to take on.
Right.
Well, it ties up their capital a long time for not so much return. They need to have the ability to make loans. That's how community banks and credit unions make money, to make loans. So they would typically be going to the bond market. Now, the instance that you described that we were talking about was, then let's just take this little analogy of a car dealer who wants to build a $10 or $15 million addition to his dealership. He's been doing really well. And so he goes to his community banker, who's been dealing with for 20, 25 years, and says, George, I'm looking for 15 for this project. Here's the paperwork, my business plan. You know me, you know where I live. You know we've been in town for 25 years. Can you help me out? And the community banker, George, will say, well, it's a little more go than I've got. It's bigger than what I can do. Now, what would happen in that instance is that the dealer, the customer, the community bank customer would say, well, look, I got to get this done because I got this business I want to expand. So I'll just go down the street to Bank of America or Wells or TD or one of the big banks because they like this sort of thing. And the community banker will say, well, now, wait a minute, this being North Dakota, let me call Bismarck and talk to the public bank, because their mission is to help people just like you, to support small businessmen, industry, and other North Dakota interests, and maybe they'll partner with us. So he says, oh, great, fine. So they send their paper up to Bismarck, to the Bank of North Dakota. Folks up there take a look at it and say, well, we know this banker, and we're really close with these guys. If he knows and trusts this businessman, and we like the paper, it makes sense, his business plan makes sense, okay, we'll get involved. And so they might buy the loan down, or they might partner in providing more capital depth for the bank to lend, to leverage against itself. So it helps the community bank do the deal by making it either more cost effective or providing the liquidity that's needed by capital investment to enable the community bank to keep that business at home. Now, what has happened from the bottom-up standpoint, which is so important, is that community banks and credit unions are this part of the sinews of local business economy.
Part of the what?
Sinews is the word. Sinews. The sort of structure. The makings of what a local economy requires. And so community banks, which have been disappearing because the big banks have been eating their lunch because it's been a bad, expensive regulatory environment, a low interest rate environment, so the spreads aren't so great. They've been disappearing. We've lost thousands in the last 10 years, thousands. Now, what happens to a community on the bottom-up scale is that when the local banks, who are the places you go for small business lending, for local mortgages, for a variety of other sort of community credit needs, when they go away, people don't have any place to go for that. And the community then is suddenly thrown into the global financial arena, and the community then lacks the depth and the capability to meet some of the financial needs, which is driven by affordable credit. Credit is the bloodline, the blood of the economy, the lifeblood of the economy. And if people can't get it, they go away. I mean, now on that notion of going away. What has happened in that little bank instance is that community banker who's making the deal for $15 million that he couldn't have done before has retained a client. He's retained that business. And as a result, in North Dakota, as an industry, community banks and credit unions retain 82% of the money on deposit in the state.
Wow.
And that's like...
How's that compare to other states?
It's exactly the opposite. The big banks have 82% of the deposited money. The community banks have only 18%. In North Dakota, they have the big portion. The big banks are diminished. So the global financial market and involvement and the vagaries of that are all sidestepped, which is why, in part, North Dakota survived the 2008 collapse, because they don't do that much business with Wall Street.
Now, I want to preach a little bit. Now, I call this the bottom-up show because I believe we're transitioning back to a culture that is more bottom-up from a top-down one that was created when agriculture and civilization came along. And it's been catalyzed by the internet and smartphones. To make bottom-up happen more, bottom-up is interdependent, caring, compassionate. It is grassroots, and it is equal, egalitarian. To make it happen, we need a shift from centralized to local. And this banking aspect is such an important part of it to support a local economy. Mm-hmm. So if you've got these centralized banks, and centralization was one of the primary factors that led to the collapse of the economy in 2008. Centralized mortgage decision-making using algorithms took away all decisions, all input from local bankers, and instead these big banks use algorithms and rubber stampers to approve these bad loans. And what you just described is exactly the way it should be. A small local banker connecting with a bank that has as its mission supporting small local economics. That's what's so important. Now, what you haven't discussed yet is how it changes the flow of money. I mean, from what I understand, that local banker, he's going to make a profit on the loan, but so will the state public bank.
Yeah.
And so all the loan money goes back into government or goes into small local business, keeps it local in the economy, and it reduces the cost. You just mentioned for a population of 700,000, they had, 600 million, 700 million, did you say?
They, in terms of profits? Yeah, about $600 million.
So for a big state, what about for a big state? How much would be there? You know, if I'm thinking I know you're working, you and your team has been working with a number of different locations, Philadelphia and Texas and around the country. I'm in the Philadelphia area. How much does Philadelphia give to banks each year in terms of money that they're putting in and charges that they're paying to banks that could be going to like a Philadelphia public bank?
Yeah. Well, those numbers I don't have right in front of me, but I'll give you some indication of what we know about Philadelphia, about their costs. Not too many years ago, and you're describing, well, what goes on with the money? When the city gives its money to a bank to deposit in an authorized depository, and the bank has to collateralize, meaning the bank has to guarantee that that money is safe. But when they do that, they're actually giving the money to the bank. And the bank gives them a note and says, we owe you $400 million, which I think is what Philadelphia has on average in its bank account during the course of the day, of every given moment for operations. Big city.
That doesn't include rainy day funds. It doesn't include pensions, things like that. Right.
No, there are billions of dollars in that the city has, but it does not use because it's on deposit someplace in some investment account, many of which are not doing so well, or in rainy day funds that are earning like 0.6, 0.7% interest. Now, they're all kind of, you look around and you think that you see the billions of dollars that are sitting around making such a little return. But you realize that the banks that are holding that money they're making bank on it. They're making lots of money on our money. So
they're not charging fees as well.
Well, they absolutely are. And so let me give you an example. In Philadelphia, about a year ago, 2 years ago, they participated in what is nothing short of a Wall Street scam called interest rate swaps. And it turned out to be a scam because of, even though the idea was, well, we're going to hedge our bets with this loan. If the interest rates change, the interest rate swaps will compensate for us and so forth. Well, who controls the interest rates? It's controlled by the Fed. And who controls the Fed? Who owns the Fed? The big banks. You know about the LIBOR scandal, the billions of dollars the banks have paid for setting up, for arranging the interest rates that were part of that regime a couple of years ago. Well, when the rates dropped like this, the interest rate swap suddenly became due, or at least payable. So the Philadelphia city paid $280 million. The school city paid $240 million just to compensate that deal. So we have hundreds of millions of dollars in those two examples that went away from the Delaware Valley. Now, actually, it was twice that much in other municipalities in the area. And right across the Delaware River from Philadelphia is the state of New Jersey. Last year, New Jersey paid for its pension fund management $672 million for management fees and bonuses. And
for how much money?
Oh, they were for managing billions of dollars, tens of billions of dollars. Now, it's a percentage, certainly a percentage of a lot of money. But in previous years, they had spent, it was $732 million before, half of which was bonuses, and the return was like under 1%. It was crazy. So, I mean, this is not atypical, actually. I mean, the pension fund managers have had a pretty good year last year, but by and large, it's been pretty rugged. Pretty rough.
So let me just do a station ID. This is the Rob Kall Bottom Up Show, sponsored by Op-Ed News, available on Progressive Radio Network and Pacifica, and at opednews.com/podcasts and on iTunes. I'm speaking with Walt Mccray, who is the just retired director emeritus of the
chairman of the board.
The founder of a new organization, the Public Banking Associates.
Consultancy, so it's not a nonprofit. It's a consultancy designed to serve the municipalities and city leaders who are looking at this and trying to figure out what this means, how it's done, and so forth and so on.
Which is great. I'm thrilled that you're doing that, and you've told me that your team you have a great team that I think is really exciting. It's a really exciting development. And you brought up New Jersey. There's an annual conference that's happening there. So why don't you tell us about that and tell us about some of the speakers?
Yeah, sure. Okay. Well,
When is
one of the reasons that we're focused on New Jersey is that, in the past year and a half, a governor's election has been in play. Many of you will know the name Chris Christie, who has lost. He's lost some of his favorability. He's doesn't have too many friends here in New Jersey anymore, it seems. But in any event, there's been a certain eagerness to get past that and to take on some of the really chronic financing issues that the state has got. Interestingly, one of the candidates turned out to be is a former ambassador to Germany. He's also a former Goldman Sachs banker. Now, it's not the first time somebody's run for governor as a Goldman Sachs banker. John Corzine was the previous Goldman Sachs guy, and he also has a bit of a troubled reputation in New Jersey. So it's kind of an uphill battle for this gentleman by the name of Phil Murphy to come from that place and to run for the governor. But he has, I don't know, just a moment. I'm so sorry. I thought for sure I fixed that. Throw it out the window.
Ours both off, and they both rang. Sorry.
That's right. But anyway, so New Jersey has had a governor's race, and it was a really exciting contest. But Phil Murphy ran away with it, and on why did he run away with it? In part because he has a fresh approach to handling and making an economic recovery for the state that's built around creating a state-owned public bank. This was huge news for all of us in the public banking world, because not only is Phil a mainstream progressive Democrat, but he's a banker, a former banker. And as our founder, Ellen Brown, likes to say, oh, he chose a public bank because he knows how banks work. He knows that this can work. And so in the last couple of months, we're all very excited nationally to see how this works out. He has won the primary. Many people just kind of assume that he's going to be the next governor. So we wanted to create a gathering of state interests, of not political interests, but civic interests, the civic associations, the unions, the teachers, the state legislators, the mayors, the policy directors. All of them will be at this conference, and we're going to be looking at what public banking is, what it means for New Jersey, how we're going to go about doing it, and also to bring out the stakeholders. Because one of the cool things, the bottom-up theme is central to this whole thing about public banking. This is about democratizing our money. Right now, we give our money to private interests who are basically, the oligarchic controllers of our outcomes and of our policies, the ones who sit on public policy, who determine public policy, who have taken over our representative governments because they are able to buy elections. So having a public bank gives the people, a little parity in the game, a little chance to be on an equal balance with the money interests in their policy decisions and in the representation. So it's the start of something that is potentially transformative for America. Right now, we are, we're sending so much of our wealth out of our state and out of really into private hands that, we have a real problem to look at any sort of a viable future where we can do something new. We can't even fix our railroad, our bridges and roads. New Jersey had to shut down its construction last year because it ran out of money. And what did they do? They went to the bond market and borrowed $2 billion and another $500 million to pay off part of the debt that they were using before. So we're always paying off this debt. When you have a public bank, when you pay off the loans to your public bank, you're building the bank's strength. So
the money goes back to the public bank, back to the people.
It stays in the people's hands.
In North Dakota, 88% of the people are using indirectly local banks that are
tied. I think like 82% community banking.
How would that change things in New Jersey if 88% of people went with local banks and credit unions instead of these big giant monsters?
Well, I think that the leverage point for a public bank is to enable the elected representatives, our representatives and our managers, to effectively and more efficiently invest in the changes that we want to see. And because this is not a retail bank, how it would affect locally would be that, well, it should make the community bankers much more resilient, much more capable of serving the needs, because there would be more money available to them through their association.
Hey, wait. I want extrapolation here. I want to know how this is going to change politics. I want to know how this is going to change the influence of the big bankers. If this happened nationwide, like it is in India and China and Japan,
mm-hmm.
and if all of a sudden 88% of the people started going with small local bankers, where the money went back into the community and it left these big banks, first of all, they would go crazy. The big banks would spend hundreds of millions of dollars trying to block public banking. I would guess that that's going to happen in New Jersey. All those investment bankers from Chase and Morgan, a lot of them live in New Jersey.
That's right.
They are going to spend hundreds of millions of dollars to stop it from happening. Maybe to stop this guy from being elected too.
Well, I hope that's not the case, but we can. It's interesting because Murphy has a lot of integrity, and it's interesting because he's got working poor roots. He came from a working poor family. He made his way forward. He's not about the Goldman Sachs routine, or that was a long time ago when he was there, and since has been really devoted to public issues. Now he sees an opportunity to serve. I think people are very much excited about having somebody with that mentality there. And yeah, the big banks are not going to like it, and they will do what they do. They're going to do what they do anyway. It doesn't have to be. It's not just New Jersey. We've seen the big banks push back against these state-level initiatives in other places like Washington and Oregon and Vermont and California and Maine. The list is quite long. Massachusetts, Maryland, big bank stuff, absolutely pushing this back down. But
now, I
just want to mention, the difference now is that the people are getting wind of this. And when we tell people about how public banks work, they say, why don't we have this now? Why aren't we? You mean we aren't doing this? What? So that's kind of the moment that we're at, which is so exciting about the bottom up sort of realization that democracy thrives on participation of the people, and people retaining their control of their power, their money.
And that is a bipartisan issue. This is not something that just Democrats are into. From what I understand, you've got some pretty strong support from Republicans too.
Absolutely, and Tea Party people, exactly.
Talk about the Tea Party people and why they like it.
Well, several of the reasons. First of all, it's very conservative. Okay, it's like we're not wasting our money, we're not giving money away for unnecessarily. That's one thing. And another is that it's not Washington, it's not central power, so it's not centralized control. These are very good Republican values and issues, but retaining local control is a very big one. And I think self-independence and self-reliance, well, those are values that I think are actually values I think that are shared on both sides of the political aisle. But the Tea Party people have been moving it in the state legislatures in New Hampshire and also present in Texas, Alaska, Michigan, some of the ones that just come to mind. So we're delighted about this. And I think that not just in terms of the partisanship, which becomes irrelevant when you're trying to, when you're really focused on public interest. What values are we trying to serve? I just think it provides a new day. So especially for the civic workers, the activists who are working in better schools, clean environment, all of that stuff. What is the thing that binds them all? Money. So if we could all align around creating a public bank with a mission to serve that the activists decide or design, then I think we've got a new opportunity to get a new tool, a new wrench to put in the works of the big machinery that's been crushing us. I may use.
And we're talking about hundreds of millions and billions of dollars for
Billion.
cities,
Yep.
billions of dollars for states. This is a huge amount of money that can make the difference between raising taxes, having more money for helping people, for infrastructure, for Medicare for all. These are the kind of things that could really make a difference. Now, and this is why the big banks and the big investment companies and the hedge funds are going to lose their hair over it.
I think we'll see what they're going to do, but it's one of the reasons that we're doing a conference in New Jersey and around the country is that we want the people to see that this is a place for them to stand. It's time for them to stand with public banking wherever they are. So we will, as part of this conference, probably be introducing a kind of a referendum or a petition that will be able to be moved towards city councils and to raise the question and to open the doors about, hey, let's make this thing happen. Frankly, again, to have somebody like Murphy, who's, I think the likely winner, take this kind of a stand should start a domino effect and at least encourage those other elected officials who don't know what it is and aren't too excited about taking a risk, kind of get them on board.
And this conference is September 16th in Princeton, New Jersey.
Right.
Who's speaking at the conference?
Well, we have be quite a number of people. We're actually hoping that Phil Murphy expecting that he will be there, as well as Seth Caperdale, who is the Green Party candidate, also running with a public bank mission. Gar Alperovitz, the Harvard history prof, who is the head of the Democracy Collaborative, and Joe Guinan, who is the head of the Next System Project, to look at what systems are we going to replace the current failed ones with. Ellen Brown, the founder of the Public Banking Institute, will be there. I think we'll have some appearances, video appearances by Nomi Prinz, who wrote All the President's Bankers, Ralph Nader, everybody knows Ralph Nader, and possibly several other well-known economists. Again, there's not much time. We're hoping that you'll be able to make your contribution, Rob. And of course, then mayors of the cities around of New Jersey, bankers who will be speaking to this, and what it means to them, etc. So it should be a pretty robust, quick day, but it's going to be very exciting. We're looking forward to it. Yeah.
If the governor candidate shows up, Murphy shows up, that'll be very exciting.
Yeah. Well, we expect him. We're hoping he'll be in town, but we're on his schedule anyway at that point.
Yeah. What I've been trying to get to also is that this is a major game changer in terms of politics as well, because if it works and public banking becomes common in major cities, counties, and states, and even at a national level, all of a sudden it takes the wind out of the sails. It takes away an awful lot of the power, a lot of the money, a lot of the lobbying funds from these big banks and finance companies and hedge funds. I mean, like, look, Robert Mercer, for example, was the biggest money man for Trump. He's a hedge fund guy. When you start, now I like, there's a saying that you don't fight these big powerful people head on. You create something that replaces the system.
Yeah.
This is what public banking does, is it replaces the system. And when you do that, the old system crumbles and falls, and it loses its power.
Well, just some qualifiers to that, because yes, I agree. I love that analogy. I know it's Buckminster Fuller's thing, that you don't fight it head on. You create something that makes the old system irrelevant. And now that would not happen here exactly that way, because Wall Street is not just Wall Street. It's also the Bank of International Settlements, the European Central Bank, a host of banks from around the world that are all privately owned. Basically, it's a bank cartel, a global banking cartel that transcends, it's transnational, it transcends democracy and sovereign governments. That's what the global banking cartel does. And when we give our money to Wall Street, that's where it goes. That's where it goes to rest. So, but
even more centralized.
Yeah. So, but The municipal and state bond debt amounts to $4 trillion. That's a lot of money. $4 trillion is a lot of money. And you can be sure that the public bank momentum, while it's picking up, it's going to be a long way off before any of that disappears. And it may not be able to make a real sizable chunk out of that to begin with. Now, it's also the case that the public...
I want to argue with that.
Okay.
We live in a world that is built on systems. And it's not a mechanical world anymore, it's a systemic world. Now, systems theory and chaos theory and nonlinear dynamics theory teaches us that when things change in a system, they create these new loops. And those loops branch off to create emergent properties. And it doesn't take much once that starts for a huge amount of energy to go into those new emergent processes. And to get them started takes a little bit of energy. Once they get started, huge changes can happen. And very often chaos is involved. But when that chaos settles down, there's a new reality.
Yeah.
And the thing is that this gives us hope that it doesn't have to take a really long time. We're not building this one brick at a time. We're shifting systems. So it doesn't have to be really long. It can happen very, very quickly. Because we're talking about economics here. If one state sees it, the first new state on the East Coast that gets it is going to attract business. Because they're going to be able to give those businesses better treatment and more favorable treatment and lower taxes. They're going to get people coming because they're going to not have to charge the same amount of tax, right?
Yeah, well, it would have an impact.
Yeah, so
on cost.
This could just domino and explode. And it doesn't have to take decades for this to happen. It could happen in a matter of a couple of years.
Yeah, no, you're absolutely right, Rob. And I didn't mean to diminish the
That's what this gives us.
Yeah, the possibility is absolutely there. I would just say, though, that the $4 trillion is, in the scheme of the global bankers, a small amount. Give you an example. Bank of America, or let's say JP Morgan, they have over $2.3 trillion in assets. But they have derivatives that are up about $75 trillion and more. So I mean, they're way over their heads, but they're playing in the world of fantasy finance.
Absolutely.
And in that world, and this is one of perhaps an illustration of what might happen that along feeds your idea, is that the next time these banks fail, and it's anticipated that that's likely, that more choices will come back. Will we do what we did before? Bail them out again? The people will be less inclined to do that. What we need to do is nationalize the banks like that.
And be ready with an alternate solution.
Nationalize the Fed as well. Now, we have to be ready. As you say, we have to be ready. Now, I'll give you some more specific examples. In cities like Philadelphia and San Francisco, the state of California, Washington, Minneapolis, lots of them, they don't want to do business with Wells Fargo anymore for a variety of reasons. Of course, they picked on Wells Fargo because of the Dakota pipeline and a variety of other consumer charades. But they're not the only ones. Now, all of the big banks have paid tens of billions of dollars in total for fines for bad behavior. And of course, they've gotten away with it. So that's the environment that we're living in. But they will continue to play with their dollars on a private basis. And they can go ahead and do that. But they don't have to use our money. That's the whole distinction, is that, okay, if you guys want to speculate on all kinds of paperwork for Wall Street stuff, great. But with our dollars, public dollars, we'll hold on to them, thank you, and do something quite different, like invest in ourselves. So we'll use our money to invest in ourselves. You all use your money to do whatever you like, but don't take our money. We're not going to give it to you anymore. That's kind of what's happening there. So they will continue to speculate for profits, money banking for profits. Public banking is banking in the public interest with a commitment to the public service. Now, I need to point something out here. This is another one of those major things that we just kind of rolled over. This bank is not run by or operated by politicians. It's not run by the government per se. The bank is owned by the people. The elected officials, maybe the governor, the AG, Secretary of Treasury, whatever, will appoint a board of directors, which will be approved by some legislative body, and they will name the bank in concert with a citizens advisory group that will act as participants. Those people will all be on a rotating through the political cycles, so that there will be at least two to three good solid distances between who's making the decisions about who gets the money. People are concerned about corruption. As New Jersey is a great spot to target that. Philadelphia is not far behind. In fact, it's all the same thing. What are you going to give these people, a bank? You crazy? No, we're not giving these people a bank. We're creating a bank for the people that will be and our elected representatives will see to it that the appropriate people are running it. That will be run by professionals with a limited amount of ability to invest by its mission. You can only invest in infrastructure. You can only invest in student loans. You can only, et cetera, et cetera. The bank will do that, and it will be transparent. So all of the deals will be visible, online, whatever. You'll be able to see who and what said and did what. It'll be truly a transparent relationship with the people's money. Now, look at who we're dealing with. Right now, we're dealing with Wall Street. What do we know about how they do their deals? We don't know anything about what they do with our money, and we have no control over it. So this is, as you say, a systemic shift. This is the next system for banking that brings our money to the people as a utility being controlled and owned by the people.
So let's talk a little bit about Public Banking Associates. You left the Public Banking Institute to start this organization to help different locales to get this started. What are you going to do? What services are you offering? Who's involved? What's your team?
Well, I've loved working. I've been with PBI since almost the start in a lot of different roles, most in the last 3 years as its chairman and chief executive officer. It's a nonprofit group that's committed to building public awareness and educating people about public banks. So it has a very specific sort of a public focus on education and participation. But what I discovered was, and I think it's evident that when you get people who are at the state level, whether they're state senators or governors or mayors and so forth, they want to engage the prospect. How do you do that? Well, PBI isn't really geared for that. And so I'm basically bringing together a host of very talented expert advisors and consultants who have been working in municipal finance and state finance, who are bankers, who are and monetary theorists in some case, to be able to approach the various ways in which to be able to kind of tie the two together. The need at the municipality level, the state level, has to be, you have to get into it. You have to do feasibility studies. You have to talk to the other stakeholders in town. You need to look at what the town needs. If they're, for example, I'll give you an example. In Massachusetts, there is now, some of our colleagues are involved in creating a new state bill up there. Networked with legislators, addressing an issue or a problem that needs to be filled. What's the problem? The problem is that even in a rich state and rich cities, they can't borrow more money for infrastructure from the bond market because they've tapped out at the limited amount of money that they're allowed to borrow. Municipalities can't go to the bond market if they have more than 6% of their operating funds already borrowed. So cities like Tacoma, Washington, also very rich but in need of money. These places need more money, and they have no place to get it. They can't get it from their budget. So the legislature is now looking at creating a state public bank for infrastructure lending, specifically for infrastructure, which doesn't grow anybody else's ox. The bond market isn't serving them now anyway. So this is one of those needs that we have then some experience and some experience and capability of bringing solutions to that team discussion and engagement, and to help them walk them through the processes. So it's going to be a very busy time, because as you know, I mean, there is this a domino effect is happening just by word of mouth. So we'll be focusing on that. Getting the job done.
There's an analogy that with bamboo, you can water it for 3 years and it'll stay the same, and then all of a sudden in 90 days it'll grow 10 feet.
Wow.
And it feels like that's maybe what's happening with public banking. There's been a lot of energy, a lot of work put into it, and I get the feeling from what you're telling me and what I'm hearing from others is that it's about to explode. It's about to really take off. And it's not like nothing's happened. And I think that when that happens, it's going to be a lesson to other people who are working at making change happen, that you don't see it happen. You don't do one thing and then all of a sudden you see the change. That you have to water sometimes for years in order to get the growth and to get the explosive change. But it feels like it's really close for public banking.
Yeah,
I've been following. I think I met you. Like, how long ago did we meet up in Yardley? That was one of those first meetings.
It must have been, I would say, 5 years ago.
At least I think it's more than that.
Yeah.
But
they will have been 11 or 12. Yeah. So another point that you made about the bottom up, I wanted to just say that, you've mentioned a lot of good things and important things about the bottom up rationale. One of the things monetarily is that monetary systems are more resilient if they're not stuck with just one product, like the US dollar now, or just one banking system. Now, in this case, the banking system, we're all bet on the private the Federal Reserve control of our monetary system, right? We actually should have the US Treasury issuing our dollars at no interest, so that we wouldn't have this massive $20 trillion debt to private parties. We could actually do away with that, but that's another discussion. We could do away with that within the confines of our constitutionally provided means. But that's not the point. There is
about local currency.
Yeah, well, I wanted to say Bernard Léotard, who is one of the principal designers of the euro, has said several times that we really need to have at least 4 different currencies to create a resilient monetary system. Because if one goes down, then then the rest of the economy has got other legs to stand on. So and I won't define the way that he looked at it, but they could serve different purposes. One could be for government funding, one for infrastructure, one for students or civil needs, etc. But what's cool is these days is that as a financial system, or as monetary systems move away from cash and into digits, most 97% of our money is digits anyway. I mean, it's not that they're not making money with a printing press anymore. That's like
not gold.
Not gold. It's nothing like that. It's all digital entries. So that opens up in itself a lot of potential thinking. But then there's the blockchain development, the Bitcoin variant, the Ethereum, where new local currencies can actually be created inside of local industries or within areas that are geographically focused. That's the day that's coming upon us now. Very exciting, because it will increasingly give people more options and more ways for us to stimulate our economy without having to rely on a centralized monetary control.
Yet there are people who benefit from the dollar being the primary dominant money.
Yeah, we do.
How would it affect us if there were other currencies as well as the dollar? Yeah.
Well, the petrodollar is getting some competition. China and Russia, and China in particular, is investing very heavily around the world in doing things for communities and for countries, building infrastructure. Yeah, there's political overlay, and there's influence and control.
That's the exercise of soft power, which is a bottom-up way of building power, really.
Right. And of course, it's how the U.S. has insinuated itself in hundreds of countries around the world, but it wasn't so soft. It was.
U.S. uses military bases. That's hard power.
Yeah, but it's hard. They move in the bases if they can't get the dictators to go along. You know, they're appointed, their chosen representatives to do what they want. Yeah, that's hard power. Yeah, but anyway, so the fact that things are getting atomized and that people are having more choices and more aspects, I think is very exciting because we can, once we realize that money is a utility, and that's another, that is, you know, a couple of paradigm shifts here. The next system that we want to be moving, our thinking toward and our planning toward is a system in which abundance and sufficiency characterizes our capabilities and our capacity for making change. Right now, scarcity and austerity are being perpetuated on the people as if there's not enough money. Why do they do that? Because it keeps us borrowing. It keeps us leashed to this indebtedness that's around every one of our ankles. People live their lives to pay their debts. They don't live their lives. They live their lives to pay their debts. Sometimes they get to marry their interests and their capabilities with how they pay their bills, but all too infrequently. And we're also coming into an age where the artificial intelligence and the technical ability is going to replace enormous numbers of jobs. And so there's new consideration even about universal basic income, which is not, by the way, part of the public banking regime necessarily, but it is an indicator of how things are changing. Yeah.
Who benefits from public banking?
The people.
Cui bono.
Yeah, it's the people. It's the people's money working for itself. Yeah, that's.
Any businesses benefit?
Oh yeah, well sure. Businesses benefit when credit is available for them to start a new business. Let's say if you have a community banker who's not broke, who's still is able to make a small business loans, then somebody can start a business. Now in New Jersey, there are over 20,000 of them, and they are the biggest hirers of the biggest employers. They hire more people than all over the country. But starting a small business is a risky job. It's also a risk that a lot of community bankers don't want to take. In North Dakota, the public bank has a plan for that. They have a plan that you got to start. You want to start a small business? Show us your business plan. And they do it through the community banks. So the community banks are the front office and the relationship with the people, because money is a relationship. They say, look, we think this makes sense. You can participate in this plan. So the banker shares that deal, and the local banker then makes the money, and the small business guy gets to start his business, and the local economy then gets to grow, expand, and diversify. So that's how the people benefit on street level. Another would be student lending. Again, North Dakota. Sorry, but that's our model.
That's it.
They in North Dakota, if you want a student loan, you can get one for 1.75% interest.
Compared to what is it for others?
Well, I think I've heard as high as 11%, but 6 to 11%. Students who have put all the work, want to start a life, and don't have any money to start their lives. Not in North Dakota. You've got a much smaller pay, and now they can begin to live their lives. So, of course, the whole matter of whether or not students should have to pay for their education is a different conversation. But that's just.
Does North Dakota use any of the funds from the banking for its educational system?
Well, sure. I mean, the student lending thing is about a third of their portfolio. But the other thing that I mentioned before about the municipal loans for 2% up to 30 years. So, I mean, that's a loan that's a really sweet loan. Most bankers don't want to get stuck at 2% for 30 years because it's a risky thing. Well, the Bank of North Dakota, which is backed by the full faith and credit of the state, not the FDIC, we're basically good for our money. That's what the Constitution says about the United States as well. You're not going to question our budget. The debt ceiling is a complete bogus contrivance to satisfy political agendas. But we're living with these systems. But in North Dakota, yeah, they have that resilient independence to serve a variety of these needs. School municipalities lending is being one of them.
We got about 3 minutes left. Anything you want to cover?
Well, I think that one of the things that excites me about this is how very practical it is and how very strategic it is. It's something that we can all speak to. And I think change happens, of course, when language is engaged, when people talk, when they create the possibility that we don't have to live in debt, when we can create the possibility of abundance, when we kind of pull the curtain away from the Wizard of Oz and see what a scam the existing fraud bank system is. I mean, it's an industry. It serves a lot of people, but basically the bankers are lending us money that they don't have. Okay,
it's a rapacious industry that exploits a situation that shouldn't exist. We should have all these public banks.
Yeah.
So I want to ask you a question. You've referred to abundance versus scarcity. How would that affect people, average people?
Well, I mean, all kinds of different ways. If we were able to have effective transit systems, for example, if we didn't have, if our water systems were up to date and could be clean because we could afford replacing, like in New Jersey, it's 10 times more instances of lead poisoning than they had in Flint. That's a rough sort of a figure. But we have problems that are not being met. Or opportunities that are not even being addressed. Ways that we can use, let's say, vacant buildings, where we can recover foreclosed homes to be able to put people back in them. We can train people to do things that have to do with preserving our environment and improving our community. This is a place for people to stand, a place for them to get involved, and also to learn, to meet their neighbors and to get out and really ultimately. It will be up to us as the citizens to tell our mayors and city councils and our state representatives that this is something that we want, and then we'll get it. That's my sense.
All right. So publicbankingassociates.com, publicbankinginstitute.org.
Right.
This is the Rob Kall Bottom Up Show, sponsored by opednews.com, progressive news and opinion that you're not going to see in a lot of other places. Available at Progressive Radio Network, Pacifica, at Stitcher, and we're growing. If you've watched this and enjoyed it on YouTube, subscribe to the channel. Sign up at Op-Ed News to get the daily newsletter. I've been talking to Walt Mccray, and keep coming back.
Thanks, Rob. I appreciate it. It's good to hear you. Take care.